Hi, this is Mark. This is Thursday, the 9th of January. This is an update for the current week. Now, on Tuesday in the live training session, I explained why my focus was on dollar strength for the foreseeable future, and I was particularly wanting to short the pound, the euro, the AUD, and the NZD. And events that have happened since then, the last couple of days, support my theory even more. And in the forum on Wednesday, I explained that the bond market is in a precarious position in the UK. The new government are absolutely financially illiterate, and they've got themselves into a huge mess tax-wise, but the bond market is what brought down Liz Truss. I think Liz Truss was Prime Minister, shortest Prime Minister on record, 59 days, because of the bond market. Well, the bond market now is in a worse situation than before, and everything in the UK is doom and gloom. So as a result of my fundamental analysis, I did short the pound. I'll show you that in a moment. It did, however, spoil my euro pound short. And then news that's come out this week, the factory orders yesterday for Germany and retail sales were terrible, extremely bad for an industrial economy. And bear in mind that they are the powerhouse of the Eurozone. So news this week, again, is adding to this theory. So for the GBP, construction was down, not massively bad for the pound, but for the Eurozone, I think this was a yellow flag event. So here's that German news. So the expectation for factory orders was to be down minus 0.3, and it was actually down minus 5.4%. And Germany is an industrial manufacturing country, and this is extremely serious. And then for the retail sales, yes, they're down, but the previous one was revised up, so not as bad. But that is particularly bad for the German economy, which is not good for the EU as well. As this morning, the industrial production month on month is out better than expected, as is the trade balance for Germany. The big event in the course of the week is NFP Friday, and that could, if this comes out, the expectation for jobs figures is much lower than has been of late. So if that comes out much worse than that, then that could give a temporary respite for the pound, etc. But I'm going to show you now my trades and what I'm going to do with them. So let's start with a winner. This is the AUD yen. I showed you this in the live training session. I had the original stop, I think, 50 pips above. It's now made almost 3 times the risk. And when I look on a 4-hour chart, it's encouraging because it's got through all this bunch of EMAs. So there's a lot of fresh air down there. The only concern I've got really at the moment is this could be an issue with the trend line. So what I did as well during the week, I had a 50 pip stop, and then I showed you in the live session how I had reduced the stop. I think I came in here. So then I'd reduce the risk. And always when I get into a trade, my first goal is to reduce the risk. Now, at almost 1-to-3 risk-reward ratio, this is giving me some concern. And I took a very small loss on the euro pound. So I want to bank some profits for this week. It's done 71 pips today. Yesterday did 61. The average has been around 80 for the last 10 days. So I'm going to take 50% of this off, and then I'm going to leave the balance to run. And to close part of a trade, you right click and you make sure you haven't got one-click trading on. So I've got a full lot on this. I am going to close 0.5, close, and I now have 0.5 left. And I'm going to move the stop for now just in here. So I've locked in, I think, about another 20 pips. Now, the euro pound the other day, I was short on the euro pound, and I showed you I initially had a 25 pip stop, and then I showed you how I had reduced that to an 8 pip stop, and then it moved into profit, I think about 20-30 pips. I didn't get the stop to entry, and then this bond news for the UK came out and went straight through. The good news is I only lost a third of my original risk. So let's imagine I had risked $100 with a 25 pip stop. By the time I had reduced that down to an 8 pip stop, I was only risking $33. Now, the other one, I took the pound because of this bond news. So this is not a normal M2 trade for me, but I have this in here with a 65 pip stop, and we are now 180 pips in profit. So once again, 1 to 3 risk reward ratio thus far. Now I want to be in this long term, but the first goal again, I need to get the stop beyond the entry to protect it. And I've gone down to a 4 hour now, and I'm going to lock in a bit of profit. So if I come in here behind, in fact, let's go just above the whole number for now. Price often will spike to a whole number. So I'm going to go to 24.10 with the stop, which is here. So I've now locked in. If NFP, it comes back and it takes me out up here, I've still made 40 pips on this. But what I will do with this is I'm going to then leave this here. I think this could be a start of a very big move on the pound. If it does come back after NFP, I would be looking to get back into this again. Now, other possibles for the rest of the week. The dollar index is moving ever higher, which is still, and it looks to me today as though it wants to retest a high. We still have MACD divergence suggesting that this is going to pull back down, but for now it looks as though it's going up. Yesterday stocks pulled back and gold went up, which is normal. Gold here, when the stock market starts to panic or there's fear in the markets, then gold will go up. Silver went up as well. Oil is up and then stopped at the 200 EMA for 3 days. It's rejected it, which is why I use these EMAs. And then Bitcoin hit 102. We're off to the moon again, and we're back down around 92, which is where I have been buying of late. If Bitcoin makes a bigger move, and this is worrying technically for those of us in Bitcoin, this is a head and shoulders pattern. This suggests that we could be on for a bigger move down on here. I do have an order in at 78 personally to buy more, and I think I'd also said to my investing group 80 was an interesting area to watch. So we could be bigger pullbacks in crypto. My bias is still to be buying, and I will cover that in later sessions. Dollar Swiss is still up here, miles away from where I want to get in. Euro, I would be interested to short the euro anywhere below around 105, so 104.90. The British pound I've just shown you. So if we do get a pullback after NFP, and as far as NFP goes, if this stays down here or lower, I will leave this to run through NFP. If it starts to get back up here, I may have to close it and then wait until Monday. CAD is still far too high away from everything, nowhere from my stop. Dollar yen, it's trying. We did have resistance going on here. It's broken it a little. Very steep MACD divergence again suggests that this is going to go back down again, at least temporarily. AUD, I've just shown you. I only want to short. I would be interested to short at 63.40. And as the 55 EMA comes down and down, I would be placing my stop behind that. NZD, too far down, nowhere for the stop. Dollar yen I showed you. And again, it's far too far away from everything. Euro pound now looks interesting to long. So a pullback at 83.20, I would be interested to long. This is not the Eurozone getting better and the euro getting stronger. This is about pound weakness. Other than that, euro, no, don't like that one. Everything else really needs to pull back further. And that's it. I hope you have a great week. Catch you later.